Hey folks, what if I told you there's a signal that the market has given us before major crashes that warns us about what is to happen? And I'm going to show you exactly what that signal is. And what if I told you that we could also use that signal on the opposite side to tell us when to start buying? I'm going to share all that with you in this video and more. Let's go. Hello everybody, it's Jeremy Whaley here from Trade Maestro. I hope you're doing absolutely fantastic today. I've got some exciting stuff to share with you in this video. As I said in the teaser, I want to give you a signal. It's a specific trading signal called divergence that the market gives us, not all the time, but very often, before it reverses, or at least before it changes the trend. And we saw it back in November before the market started to crash, and we're starting to see it in some crypto areas right now. We're not seeing it in the market itself, but we're seeing it in the crypto space. And so I want to talk about that. I did a market update not too long ago. I don't know when you're watching this, but I recorded the market update like 30 minutes ago, and we had some divergence in it, and I said I would do this video to show you guys how we do divergence and how we deal with it. So let's get over here and take a look at some stuff, and I got to get my glasses on so I can see what's actually going on here. I want to start with the Dow Jones Industrial Average, and I'm going to get rid of some stuff and kind of clean this up so we can start to see it. And what I'm actually going to go to, normally whenever I do charting like this, I start and I almost always stay on a daily chart. Really depends on what time frame we're trading, but for the most part, because I'm a swing trader, I stay on the daily chart. In this one case, last fall, I started to notice some stuff that was happening on a weekly chart. It's not normal that I look at a weekly chart, but I was last fall, and I started to see this signal. So I want to share it with you. And so what I'm doing right now, I literally just switched the chart over to a weekly chart. So you can see this Dow Jones Industrial Average weekly. And you do see the moving averages and stuff in here. But what I want to do is I want to go into a function that's part of TradingView. And I'm going to go to November of last year and show you what we were looking at. So this is where we were at last fall. According to the chart, it is now November 15th of 2021. And this was the bullish trend. And if you zoom out, you're going to see that this bullish trend had been in play for a long time. We're actually coming off a pretty big move because following the COVID scare, which is this little blip right here, we were able to make some really incredible profits in the market for quite some time. We had a really good bull run after that. But let's go back into resizing this here, trying to get it to what we were looking at last fall. All right, so this is what we were looking at. And I said something, I noticed something, I said it to my students at the time in my profit picks class that we do on Sunday nights. I said, guys, take a look here. This is weird. On a weekly chart, we've got higher highs on the stock, and we have the corresponding highs on the stochastics oscillator. This is the oscillator I use. And you'll notice that these peaks and these peaks, timing-wise, are matching. You see that? Okay, so I'm drawing your attention to this. So we had higher highs on the stock, or in this case on the index, and we had lower highs on the oscillator. Now, why is that a problem? Understand that trends are formed by a pattern of higher highs and higher lows. Okay, and the oscillator that you see in the bottom here, this little indicator, it oscillates back and forth. It just kind of keeps a nice little steady eddy moving back and forth in terms of, you know, what the market's doing. But it stays, in this case, it's a stochastics. It's going to stay within a range of 0 to 100. When that stochastics cannot match the highs that the market's doing, and it starts to go the other way, what that shows is it shows a loss of momentum. And so that's what you're actually seeing on this chart here. If I zoom back in here, you can see it a little bit better. What we have is we have the market confirming higher highs. That is a bullish trend. By definition, that is a bullish trend. And you see that we had higher highs and higher lows. It's bullish, right? But down here with the lower highs, this is a bearish signal. And so what we say is we say that the oscillator, I'm going to write this word in a different color here, is diverging bearish. Okay? So the oscillator, in this case, the stochastics oscillator, is diverging in a bearish direction. Bearish divergence. Now, you notice how I drew this on the chart, and I'm just going to give you the secret. It took me a long time to learn this. You draw the matching highs for bearish divergence. Okay? So if you have lower highs on the oscillator and higher highs on the index or the stock or the crypto, whatever it is you're trading, lower highs on the oscillator, higher highs, that gives us a bearish divergence. It's diverging in a bearish direction. Now, here's what you need to understand about bearish divergence. It's a loss of momentum. It shows that the momentum to keep pushing higher, making higher highs is disappearing. Well, what this does is it very often precedes a trend change. And let me help you understand that a little bit, coming back over here to the chart. That trend change, it precedes a trend reversal, but more specifically, that change could be a move from bullish to sideways, or it could be a move from bullish to bearish. Okay? So it could go either way, and it really does not tell us which one's going to happen. It doesn't tell us if it's going to be a reversal, that would be a move from bullish to bearish, or if it's going to just be a termination of the previous trend, we're going to move sideways for a while. Either one is very valuable, because if you're in this bullish trend and you suddenly notice that, wow, we've got all this bearish divergence, then you realize that, you know what, I probably should get out of this trade, because this trade is creating a loss of momentum, or it's giving us a loss of momentum. Now, let me go a step further here and show you something, if I can get it pulled up. Got way too many screens and all this stuff here going on. What am I looking for? I forgot what I was looking for. Oh, yeah, I remember. Sorry, I was trying to, I didn't like all the glare that was happening in my glasses, so I closed this other computer, and then I realized I lost my screen here. You can't see it, but I can see it. All right, so what I want to pull up now is a series of oscillators that I call the three Amigos. And what this is it's a series of three oscillators. It's the stochastics on the top with my settings that I use. And you see very clearly during this time frame, we had higher highs on the index. We had lower highs on the oscillator. We also had lower highs on the MACD, which is another oscillator. And we had the same thing happening on the RSI. So we had three of my three oscillators. I almost always use the stochastic, and I often, if I want to have more confirmation, I'll look at the MACD and the RSI as well. So three of my three were giving me the signal. Now here's why this is important, and I'm going to go back in time here. Some of you have probably seen me do this before, but I'm going to go back in time, and I'm going to show you that last time this had happened, before this, was back here. If you can see where my cursor is, I'm going to draw it on the chart. Higher highs, lower highs across all three oscillators like that. You see that? And the last time that happened, that set us up for a pretty intense sell that came in late 2015. It was actually about August of 15. And at that time, the Dow Jones sold from about 19,000 down to 16,000. So that set us up for about a 4,000 point bearish swing. That would have been good to know, right? Yep, it would have been good to know. So you say, well, where else has it done? Well, previous time before that, let's go back in time here a little bit. And previous time before that, where we had the same scenario, was in 2011. And again, across all three oscillators, we had that bearish divergence. This time, the market sold off from 13,000 down to 11. So it wasn't as big of a sell, but it was still a 2,000 point move. Again, it would have been really nice to know that, right? Well, let me show you this one. You ready? What if I go back a little bit further? Where was the previous time that we had that kind of divergence set up? And the answer is right here. This is in October. June, July, September, October of 2007. And look at the bearish divergence that we had across all three oscillators on the Dow Jones Industrial Average on a weekly chart. Now, I want to clarify, this is a weekly chart. I don't usually spend a lot of time on this. This is a big cycle. Okay, so in order for me to get this signal, it has to be a big bear move that's coming. And this signal also preceded the market crash of 2008. So people sit here and they often say, Jeremy, can you really use these signals? Can you really use technical analysis to tell me what's going to happen? Does it, forecast market crashes? Well, we used it in 2008. We used it in 2011. We used it in 2015. We used it in 2021 to forecast the market crash that really kicked off in January of 2022. So let's come back now to the chart, and I'm going to show you we're still in the simulator. Okay, if you missed that link, if you joined the video late, you don't understand. I actually am running TradingView as though it's a simulator. So what you're looking at is November of 2021 right here, okay? So it's November 15th, 2021. I'm going to run this thing forward. Here we go. You ready? Move this thing forward a little bit. And where does it go? Oops, not moving as fast as I wanted it to move. Sorry about this. There we go. All right, so let's move this thing forward. It's doing a week's worth of data at a time, so it's kind of moving slower than I like for it to use because one click is a day's worth of data. And here we are. It took us not too long before we're crashing. Okay, now look what happened. I really want to draw your attention to this. Look at how we ended up with 3 peaks. I started marking this in November, but it ended up with 3 higher highs and 3 lower highs across that divergence. And then we started getting on a weekly chart the move below everything. Okay. Now, if you were following me back then, and many of you were, because, all of you come from different angles. So some of you have been following me for a long time. Some of you are new. Welcome, by the way. If you watched my market updates back in November, I warned you of this. And I told people then, I said, start preparing, start taking care, because the beginning of 2022 and into the summer and even into 2023, I anticipated was going to be pretty rocky. And right now, it's July of 2022, and it's been a horrible year, a horrible, horrible year. People are down 25, 30%, NASDAQ's down over 30%, and people did not see it coming. The news media still hasn't fully acknowledged that we're in a recession, but we are. We are. And you say, well, how could we have known? We got the signals right here, okay? In fact, let me just stop this, and I'm going to move it forward now, and here's where we actually are real time. Yes, I want to exit, and oh, that's my weekly chart. Okay, so there you see it on the weekly chart. Let's go to the daily chart so you can see the pain that we've actually been enduring. Resize that for you. There you go. Yeah. That's the pain we've been enduring, folks, right through there. So the last 7 months. And if I did go back to the weekly chart, just really fast here, you'll see we're well below the averages. Averages have all crossed. And we are really looking at this correction taking shape next down to about 26,000. And ultimately, I'm anticipating we're going to get back to 18, 19,000. And if you look at the timing on that, it puts us into 23, probably spring of 2023. Okay. Now, why do I say that? Why do I make a big deal about that? Because in November, when I started laying this out, that's the same time frame. We're still well within that exact time frame. And we were able to anticipate that with this divergence signal. So I wanted to introduce that to you. And now the next thing I want to do, I want to share with you is going back again, still on a weekly chart. Let me show you a different way of looking at this divergence. And what you're going to notice, this was back in 2008 again. This is 2008 on the Dow Jones Industrial Average. Look at these lower lows as the market was just collapsing. And look at suddenly what's the signal we got at the bottom. And the very, very bottom of the market, we got a signal that the market was bearish, but the oscillator was bullish. And you say, what does that mean? Well, this is a bullish divergence. The oscillator was diverging in a bullish direction while the market was continuing to put in lower lows. The oscillator was starting to give us a warning that, hey, we're losing bearish momentum. We're starting to go back in the bullish direction, okay? So this signal can actually be used both ways. We can use it as bearish divergence. In that case, we're going to draw off the peaks. So higher highs, and the oscillator is going to have lower highs. in the case of bullish divergence, we're going to be drawing off the valleys, lower lows, and the oscillator is going to be having higher lows. So let's come back in time here. People are wondering, are we near the bottom of this current market? And looking at this time frame, I'm going to say no. I'm going to say no, not at all. I mean, we haven't even really put in the first bottom on the oscillator down here. You see that? So we need to put the first bottom in, and we certainly haven't had any kind of a bullish divergence here. So on the oscillator, I'm going to say no, or I should say on the Dow Jones, I'm going to say no to possibly having a bottom. But let me show you something that is kind of cool. You ready for this? So a lot of you have been tracking with the crypto markets. A lot of you know that Bitcoin has been selling off substantially over the last many months. And we're starting to see some bottoming opportunities with Bitcoin. I'll just kind of draw your attention to it. If I were to put a line right in here and follow that all the way across here, right around 20,000, we're starting to see that support build for Bitcoin. Now, Bitcoin does not have any kind of bullish divergence at this point, but there's two cryptos that do, and they actually inspired this video because I was doing an update on these cryptos, and I saw this signal, and I promised the people watching that video that I would do this video. So let's come over here and take a look at XRP. This is XRP is a crypto. I'm going to turn my lines back on here so you can see them and so that I can see them. And I want to draw your attention to these lower lows that are coming into XRP. Now, you see that? And look at the oscillator. Look at our stochastics oscillator. Boom. Higher lows. What is this, folks? This is bullish divergence. Bullish divergence. Again, when we're drawing divergence, we're going to go off of the valleys, not the peaks, but for bullish divergence, we're going to go off the valleys. I should clarify that. For bullish divergence, we go off the valleys. So the stock is making lower lows, or in this case, the crypto is making lower lows. The oscillator is making higher lows. Okay, so take a look at this picture. Lower lows and higher lows. You see that? For bearish divergence, we'll go off the peaks. So higher highs matching lower highs on the oscillator. That's how that goes. So you see this bullish divergence coming in with XRP. Could we be putting a bottom in for XRP? The answer is yes, we could be. And I think we might be. I originally had targeted about 25 cents for the bottom on this, but as you can see on this daily chart, we're putting in a very, very solid bottom here. We've run into it now about 3 or 4 times, right around 30 cents. We've got that bullish divergence coming into play. As soon as XRP starts breaking above these moving averages, we start to get some confirmation. I think you're going to start to have the buy signal for XRP. So if you're watching this right now, I'm recording this July 18th, 2022. If you're watching this right now, go check this out. Put this on your radar. The other one is XLM. So let me pull up XLM. These are very similar cryptos. In fact, okay, why is it not coming up? A lot of people who trade XRP really love XLM as well. And what I want to show you is a couple things on this. Notice right in here, boom, there's your lower lows and your higher lows on the oscillator. Okay, you see that? So XLM is right around 10 cents right now, between 10 and 11 cents. And both XLM and XRP are putting in the bullish divergence. And here it is with the 3 Amigos, my 3 oscillators. You see it happening very clearly across all 3 of those oscillators. So there is definitely something going on here. We're starting to put some base in here. I'm not saying you need to go buy this. And I'm also not saying this is going to be a bullish trend. What I'm saying is this bearish trend is losing momentum, and we're starting to put in the bottom. We're going to start to build an accumulation period for XRP and for XLM. And as that accumulation period grows, eventually you'll have to break out, and eventually it'll be the right time to buy. I can't tell you that it's going to be next week. I can't tell you it's going to be in 3 weeks. Sometimes this divergence will go on for 2 or 3 months. I've seen it go on for 6 months before you actually have the reversal in play. But it's building, it's coming, and that's what I wanted you to see. And these are great signals. These are the kind of signals that will really help you make a lot and save a lot in the market. Another spot I wanted to share this with you, right here on XLM. Take this back to full screen for you. Right here on XLM, notice back in, where was this? April of 2021, we did not get it on the stochastics, but you did have that same bearish divergence on 2 of the 3 Amigos. We had it on the MACD and we had it on the RSI. So once again, the bearish divergence warned us. This was back in 2021, May of 2021. It warned us that this is XLM. It warned us that XLM was going to turn over, and it was the bullish trend was done. We were going to be bearish on XLM, and that was when XLM was trading at 75 cents and beyond. And we got bearish divergence saying, no, this trend is losing steam. Now we're at the bottom. People are afraid. Back then, people were all excited about it. They thought XLM could do no wrong. They were just jumping into it. And we started warning people, hey, this thing's getting divergence, losing momentum. Now everybody's afraid. Nobody wants to touch crypto. And what am I telling you? I'm telling you right now, we're coming to the end of this. We're losing the bearish momentum. You're going to start to see it build the base, and probably at some point here, it will start to grow again. So I hope that's helpful for you. I hope you guys understand this concept of divergence a lot better. Listen, if you haven't checked out what we're doing over at TradeMaestro.com, come over and check it out. We've got all sorts of stuff on stocks and equities and options, and now we're doing crypto stuff as well. If you haven't subscribed to the YouTube channel, please get yourself subscribed to the YouTube channel. It's the least you can do. Like the video. If you're over on Facebook or wherever else, obviously like it, subscribe, whatever you need to do, wherever it is you're watching this. But if you really want to take your trading to the next level, come join me at Trade Maestro, trademaestro.com. That's here. I'll put this one back up here. I think I will. There it is. Oh, nope. There it is. TradeMaestro.com, Maestro.com, TradeMaestro.com. And join my membership. I have a monthly membership where we go into all sorts of details for all this kind of analysis and stuff that you never even knew existed. Well, okay, you might have known. I don't know. Most people don't know it exists. And it's this stuff here. This is the techniques that will help you make money in the market. I have so many clients that come to me after they've made a lot and then they've lost it. And they say, they're looking for help so that they don't ever go through that pain again. I have one client who lost over $1 million trading crypto. He made the fortune, and then he lost it because he didn't know when to get out of the trade. He didn't know things like this bearish divergence. I have another client lost over $500,000, and he did that over the last couple of years, and then he finally reached out and he's like, Jeremy, I don't know what to do. I made all this money, and then I lost all of it, and I'm starting back at square zero. I'm discouraged. How could I have possibly kept my money? 3 simple steps to trading, folks. And I'll give it to you right now. And I know I'm kind of going off on a different tangent here, but I'll give it to you. Number 1, pick the direction of the trade. Doesn't matter if you're trading stocks, options, futures, Forex, crypto. It's all the same. Pick the direction of the trade. And how do we do that? We do that with analysis like this divergence tool that I'm teaching you right now. Second step is apply the appropriate strategy. So if the trade's going up, it's going to be one type of strategy. If the trade's going down, it's another type of strategy. If you get into options, there's all sorts of strategies that we can apply based on if the trade's going up or if the trade's going down. And then the third step is the risk management piece. When you put those 3 things together, analyze the direction of the trade, pick the direction of the trade, apply the right strategy, manage your risk. You put those 3 things together, it's done. There's no reason you ever need to go broke. In fact, nobody should go broke. Nobody should go broke trading the stock market, crypto market, or any other financial market. It all comes down to what you know and your risk management. So if you're ready to take your trading to the next level, come over to TradeMaestro.com. Let me help you out. And for everybody else, well, regardless, subscribe. Get yourself subscribed to the channel. Get yourself subscribed to my social media and all the other places that I send out free stuff, including on my website where you can sign up for my email list, and I'll send you all this stuff directly to your email. All right. Thanks for watching, folks. Hope you have a wonderful day, wonderful afternoon. Leave me any questions or comments, and I'll talk to you soon. Until then, happy trading.